Imagine you were thirsty. You wanted some water. Go to your tap, or you go buy a bottle of water. You go fill one up. Imagine it was dry, or there was no water in that tap, or the bodega around the corner was closed, had no water. Imagine you had to go take a bio break in the middle of the night. There's no toilet. What if you're in your dorm, if there's an undergrad student? No toilet down the hall. Imagine that was every day. It wasn't just you. It was your neighbor. It was the house down the street. It was all the houses around the corner. And it has been that way forever, and you don't see a way out. There's 1.7 billion people on the planet who don't have access to proper sanitation. Around 800 million people do not have access to safe water. So how do you solve this market failure? Both a social and a climate problem. Can it only be done through philanthropy? Or actually, can you make investments to help some of the most vulnerable people in the world have access to both sanitation and water that's also affordable? Well, you are all very fortunate today to have the co-founder of water.org and the president of WaterEquity to explain how they have a solution to this problem. So Gary, I think my head's back here a little bit, but thank you very much for zooming in today. And we're very lucky to have your colleague who's going to have a great fireside chat with us. So, can you kind of take us back a little bit in your history? What motivated you to launch water.org? And we'll get into WaterEquity, but take us back in time of how you and your business partner, I think a lot of people may know, how did this come about? How did you create water.org and why?
Well, thanks, Mark. Thanks for having me here virtually. I wish I could be there in person with you to join in the session, but great to be able to join in this way. Yeah, it's been a few years. It was back in 1990, actually, and I was in graduate school myself at the time and was focused on this issue as an engineer. I was always captivated by this global need for water and sanitation services, and it was just astounded that the world had come so far, and yet still, as you point out, almost 2 billion people don't have water or sanitation, and wanted to do something about it. And I think that was really this genesis of an idea for me. I'd always kind of heard that your life should be about the world's greatest need and your greatest passion. And to me, that all came together perfectly when I saw this problem and decided to do something about it, but then tried to do it in an innovative way. And I think that has been the key to it, to not just see a problem and tackle it, but to tackle it in a way that you can see the fullness of the solution. And we knew in the early days that philanthropy wasn't going to be enough to solve the problem. There's just not enough charity in the world to solve a problem so big and intractable as water and sanitation. And so to be able to innovate and to find the scale of a solution that would match the scale of the problem was what I was trying to do. And then learning that finance was the key to doing that, and understanding that poor women around the world were already paying huge amounts of time and money, and paying in terms of their health. They were paying in terms of their kids not being in school. All of these coping costs that they were paying actually could be monetized if you could help them get access to water, so they're no longer paying 25% of their income to buy water from a tanker truck or walking miles every day. And so to me, it was all about a big problem and trying to find a different solution that would scale.
And today, you've evolved and you've created WaterEquity. I often call it the asset management arm, right, for water.org, for private investors to participate. What was the rationale for that? Moving away, or not moving away, but evolving and adding to water.org's work with WaterEquity.
Yeah, so with water.org, that innovation really was what we call water credit. And water credit was encouraging microfinance institutions around the world to begin lending for water and toilets, something that they were very averse to. They saw it as too risky. And so what we did was use philanthropic capital to help de-risk this for them, to help them do the market research, to get the expertise on board, to lend for water and sanitation. And so what we discovered was, with that technical expertise provided by water.org, they were able to start making these loans. And fast forward to today, and they've made about $4.4 billion in these loans at the household level to help people get water and sanitation. But we also knew back in the day, before we started WaterEquity, were these local financial partners, they weren't getting the capital that they needed, the wholesale capital that they needed to scale up even faster. And that was their feedback to us. It's like, if you can get us more capital and keep it affordable, then we can do, millions more loans to households. And that was impetus. Matt, the co-founder, Matt Damon, and I were in the back of a Jeep in India and talking this over as we talked to these partners. And he's like, I'll put in the first $1 million. Let's go create a fund. And so that was the first fund that we developed before there was a WaterEquity. We incubated it inside of water.org. We raised $11 million and we then deployed that. And so that worked really well. So it's like, well, we need to set up a separate asset manager to professionalize this even more, to really take it to scale. And that was when we created WaterEquity as a spinoff, and now have the good fortune of having Paul O'Connell leading that.
You mentioned the 4.4 billion. Can you talk about some of the other accomplishments, specifically from WaterEquity, maybe in terms of access of people and the type of beneficiary that is able to access these affordable loans to then access affordable water and sanitation? What are some of those main accomplishments to date?
Yeah, well, I think, it's really good to take this all the way down to the household level. We talk about finance, we talk about billions of dollars, 58 million people that we've reached together with WaterEquity over the years. But really one person tells the whole story. And there was a woman I met in the Philippines. Her name was Lina Diza, and she didn't have a water tap at her house. She was forced to buy water from a tanker truck that would sell it in her neighborhood. It wasn't even, high quality water. And she was paying about $2 a day to get that vended water, about $60 a month, right? And she was doing that because she couldn't afford the roughly $300 it would take to pay a connection fee to the utility. And so, but for having that $300, she was forced to spend $2 every day. It kind of gets down to this concept of, it's really expensive to be poor. And that was definitely the case for her. So she had a water credit loan from one of our local financial partners, got the water connection. Her loan payments are about $5 a month for about 2 years, and her water tariff is about $5 a month. So you can see right there what's happening with these coping costs. And if you can help people overcome the coping cost and get access to water in their home, they can reap huge financial benefits, which trickle down into more money to spend on other needs for health, for education, and things like that. So it was really just creating this underlying asset, really, that is, millions of these loans that have happened, and they get repaid at a 98% rate, by the way. And I think that's largely because about 84% of the borrowers are women. And it's really been a way for us to kind of crack the code on this crisis in a way that can start tapping the financial markets as opposed to just the philanthropic markets.
I like how you said crack the code. But this hasn't been easy. So can you talk about some of the challenges you have had to date in building WaterEquity and what it is today, either if it's doubters from the financial sector or just managing a huge portfolio of really challenging assets in remote parts of the world? What have been some of the challenges?
Well, I'm sure that last part is challenging too, but Paul and the team makes it look kind of easy. For me, the challenge has been really, I talk a lot about suspension of disbelief, right? When we first had this hypothesis that really people living in poverty would pay for water and sanitation services if they could only get access to finance. This was in the face of, probably about 1,000 NGOs out there that do water, right, in low-income countries. But everybody's doing it philanthropically, and the conventional wisdom was everybody was equally poor, and they were all too poor to pay for these solutions themselves. And so it first required suspension of disbelief that the poor could actually be customers. And so that was a real hurdle to get over for us. We had to scrimp and put together enough philanthropy that we could launch WaterEquity. But once we did that, people then saw that it was working. And so I think that concept of a water NGO like water.org becoming an asset manager, we're now a registered investment advisor. That required a lot of suspension of disbelief too. What's a water NGO doing creating an asset manager? But again, thanks to Paul and the team, and I won't steal his thunder about where we are right now and all the success, but suffice to say, it's going really well.
Well, you took the words out of my mouth in terms of what I plan to say, which is don't steal Paul's thunder. But what's around the corner for WaterEquity, and then we'll let you go and we'll kick off our fireside chat. But again, to use that word, don't steal his thunder, please.
Yeah, okay. Well, I think what's in the offing for us is a strategic opportunity around infrastructure, which we've been doing a lot of this from the bottom up, generating demand for people to connect to the local water grids. But we also see a need for more kind of bigger chunks of capital to be invested in service providers, in those types of businesses that put the pipes in the ground, and utilities. And so we see that combined with the stress that climate change is already putting on those resources, and the financing that's kind of waiting in the wings that wants to have impact around climate, both adaptation and mitigation. And so I think what we'll be doing is weaving infrastructure and climate funding together, and then also continuing to draw on the synergy between water.org, which is using philanthropic capital still to be able to provide the technical assistance that we need to get this infrastructure work and other work bankable. It's not necessarily always bankable right off the bat. The technical assistance can kind of push it over the line. And so we're using that philanthropic capital catalytically with technical assistance so that will then kind of ease the way for the capital markets via the WaterEquity funds to come in. So I think we're looking at the future where we have those two more closely integrated and working at the intersection of infrastructure and climate.
Well, great. Gary, thank you again for zooming in with us today. We really appreciate it. We'll do a quick just thank you, a round of applause for Gary, and we'll kick it on.
Thank you, Mark.
See you, Gary.
Good luck with the session. Take care.
All right, well, while they get the technology moving there, we heard about Gary, Paul, but you've had an illustrious career in finance. How did you end up at WaterEquity before we kind of get into the nitty-gritty of what you guys do?
Happy to talk a little bit about that. I never know in a fireside chat, do I talk to you or do I talk to everyone?
Do both.
We'll mix it in. So I got my start in finance, as you said. I did my PhD in economics and started a company right after that with Ken Fruit, my advisor at Harvard, and Rudy Dornbush at MIT. And it was a very traditional finance asset management type effort. We were a quant finance manager. We traded public securities at frequencies ranging from a microsecond to a week, and tried to make our way in the world as a traditional asset manager. It was an inauspicious time to start. This was 1997, and some other academics had started long-term capital management that year, which blew up in 1998. And in general, it was an interesting time. The Asian crisis, we had the dot-com bust in 2001. The stock market took a decade to recover. Not many people remember the decade of the 2000s. Stocks returned nothing, zero for that decade. But we had some good fortune. We did lose Rudy to cancer in 2002, but through it all, we managed to have some success and to deliver for our clients. Now, we were trading in emerging markets, and that got me thinking a little bit about some of the challenges we could see on the ground in emerging markets, and wondering whether there was more that could be done. And in particular, as Mark alluded to, there was a sense that to help in emerging markets, you needed to go to philanthropy. And that's where Gary and Water.org had started. You need donations. But the world was beginning to shift in the aughties to think beyond that and say, well, wait a second, is there something that we can do better than that? Is there something that maybe the capital markets can help us with? So I put my shoulder in behind childhood mortality at the time with the Gavi Alliance. For those of you who don't know, the Gavi Alliance was founded by Nelson Mandela and Bill Gates in 2000, and it was sort of a recognition that immunization had gone off track for a decade, and it was time to get back to getting vaccines into the arms of young children across the world. And they were trying to use what they called innovative finance. And in particular, with the good offices of the Gavi Alliance and many governments, they were able to issue what they called IFIM bonds, International Facility for Immunization bonds. And people called this innovative finance. And it used to, I was very, very happy to be involved, but it used to make me smile and also get a little bit frustrated. Because bonds are just about the simplest financial instrument there is. All you're doing is moving money through time. You're borrowing from the future and moving it back to today. The capital markets can be a much, much more powerful thing than just moving money around across time. You can shrink wrap risk, you can share risk out, you can de-risk things, as Gary mentioned. It seemed like there was a lot more that could be done. And so that's actually what led me to water, because water is something which, as you said, we all use every day. It's one of those products where you don't have an option. All 8 billion people on the planet consume it every day. And we also consume a sanitation service every day of one way, shape, or form. Demand is completely inelastic. The product demand is there. The question is, how can it be supplied better? And as Mark said, if 2 billion people don't have access to decent sanitation every day, and 1 in 10 don't have access to water every day, is there something the capital markets can do about it? And so that's a long-winded way of answering your question, Mark, but that's what brought me to water.
What year was that?
So that was, I joined the Water.org board actually in 2016.
And then how did you evolve into your current role as president of WaterEquity with all the great accomplishments and growth ahead? What year was that around?
Yeah, so that was around 2019, yeah. And it was just in line with what Gary said, the evolution that Matt and Gary were going through about capital markets.
High level, WaterEquity. How many funds do you have in place today? And what's the total AUM in terms of what you can share? Because I've seen it grow significantly since I first came aware of water credit, as Gary alluded to.
Yeah. So it's gone well. So we've now got 4 funds fully closed and deployed, and it's about $1/3 billion of committed capital and growing, as you say. So there's definitely we've seen success with that capital, and we've seen demand from investors for more of that.
Well, I'm one of them in terms of my firm, and we're very proud of our partnership. Gary talked about how you execute your program through microfinance institutions. I think most people know it's a very rural, active, many cases fintech financial institution in difficult parts of the world. Most of them started out by providing access to finance for small businesses, micro businesses. That's what they were used to. Was it hard to convince them to create a loan product for water and sanitation? Like, how are we going to get repaid? Was that a challenge over time, and has that changed?
Yeah, that's the conundrum, and that was the thing that really gave people pause when we first started to do that. Go back to what I said a minute ago. every day, every human gets water. So the question, it's not a question of whether they actually consume the product or not. They do. The question is, what do they pay for that? And then you look across the emerging markets and the 1 in 10 that don't have water. In many cases, it's women paying in hours of their time to walk to get water. Or it is, again, a woman in a city who is buying tanker water for somewhere between 5 and 20 times what it would cost if she had a tap in her house. It's a health cost because someone drank contaminated water and ends up sick. It's a cost in time lost at school because a young girl is helping her mother get water instead of going to school. So there are all these coping costs, or almost invisible costs, that people are already paying. The pure capitalist in you, can look at that and say, well, wait a second, if the costs are already being paid and we can alleviate those costs, that should release resources to pay back a loan if we lent it to these people. So it's not like you're making a loan in the hope that they start a business or that they buy a motorbike or a moped to get to work, or that they use it for some income-producing purpose. It's that the loan is used for a spending-saving purpose. They're saving the costs of health, education, or paying 20 times what they should for water. And those released resources are what allow them to pay back in financing.
How many countries now is WaterEquity active in?
Yes.
And which are the main, well, can you give a little bit of a broad scope of some of the main markets where WaterEquity is active?
Yeah. So we're in 15 now, and looking at growing that to 23. And the major markets are, South Asia has been a place where the need has been extraordinary for water and sanitation for many years. Countries like India, Cambodia, Indonesia, the Philippines. Increasingly now, Africa is an important market for us, especially as we're seeing the impact of climate change and the depletion of standard aquifers and water tables. And it's also true in Latin America. So we're in Guatemala, Ecuador, Peru, Colombia, Mexico, markets which are perhaps a surprise for some people because certainly the GNP per capita is higher in Latin America than it is in sub-Saharan Africa or in South Asia. And yet, we see many people lacking access to basic water and sanitation there.
So let's say I'm in India and I go to my local microfinance institution and I get a WASH loan, water and sanitation loan. How would I use that? What would I buy? What would I build? Can you give some examples of the use of proceeds of a WASH loan that I may have gotten from a local institution funded by WaterEquity?
Yeah, so Credit Access Grameen Limited is a well-established microfinance institution in India. And they make small loans to people for many, many reasons. They have about 2 billion of small loans on their balance sheet. They're a publicly listed company. You can see their financials. Inside that program, they have a dedicated water and sanitation loan program, which households can sign up for. Now, for the most part, Credit Access Grameen serves unbanked people. These are people at the base of the pyramid who don't have a bank account or who are working in the informal economy, but they have the capacity to service a loan. Credit Access Grameen, in their water and sanitation program, the average loan size is $160. And that's lent over 18 months. And the borrower pays back something like $210 over the 18 months for that loan. They'll take the $160 and use it. About 3/4 of it of the borrowers will use it for a sanitation solution, perhaps building a pit latrine or a dual pit latrine on their property. And about 1/4 will use it for some sort of water solution, like a connection to a local tap or a nearby well. And suddenly, almost instantaneously, as Gary likes to say, solving their water problem and then paying off over a period of about 18 months to 2 years that $160.
Okay, so Gary hit on it a little bit, but let's maybe break it down by the most recent fund, I believe is Fund 4. But that's just kicking off right now, right? That's in deployment stage.
Yeah.
Fund 3, this is a fund that I know. What have been some of the results to date? Thinking about those examples and the use of proceeds in these markets, what have been some of the results of that fund alone? And the reason why I want to hone in on like just one fund, because many of us in this room are or will be investors. So we think about one investment. What are some of those impact returns of that one investment? I mean, I love the big figures that Gary gave in terms of WaterEquity's broad accomplishments to date, incredibly impressive. Let's just say we focus in on one investment at a time. What are some of the impact results that you have attained today in let's call it Global Access Fund, aka WaterEquity 3, right?
Yeah,
Okay.
yeah. No, that's right. That's our third fund. So I'm just thinking now. I think that Fund 3 has about 30 large loans outstanding. So I should have explained. What we'll do is we'll lend to financial institutions. So that fund is lending to about 30 large institutions, and those institutions then in country on-lend the money in small amounts to the end clients, almost all of whom are women, especially in India. So we've got about 30 loans outstanding in 10 countries, scattered all around, and that fund in the first 2 years of its life has reached 1.5 million people. Now I know it's not just us. Anyone working in the development space likes to throw around numbers about people reached, and sometimes our eyes glaze over when we think of the zeros and is it 1 million, is it 1 billion? What is the need? To be clear, there are about 800 million people who don't have access to water. Our goal is to reach 100 million of those over the next 5 to 6 years. So we're really trying to make a dent in this problem. That fund has done 1.5 million on its own.
Congratulations. So that's some of the impact results to date, and there's going to be more to come through Fund 3. Now we're in a business school setting. Talk a little bit about financial returns and share what you can. Some of this is private information, but what is the target here, and how has that resonated with private investors, individuals, foundations, institutions? Like, how do they think about analyzing WaterEquity given your potential target financial return, given the high impact that you just walked us through?
Yeah, it's a great question. So, and this is a topic which I could talk for hours on, so you may have to cut me off. But in a business school setting, right? Many of you will be familiar with the traditional mean variance frontier analysis, risk and return, right? You see a vertical axis with return on it and a horizontal axis with risk on it. And we talk about investors choosing the optimal mix of risk and return that they're comfortable with. Now, what has happened in recent years is that a quote-unquote third dimension has been added to that chart, which is impact. Understanding a little bit about what it is your investment is doing in terms of impact. Now, you might not be an impact investor, but you still might want to know what impact your investments are having. Maybe they're fossil fuel investments. Maybe they are investments in military hardware. Maybe they are investments in green climate change. Investors are now interested to know what that third dimension is. That is where we've been able to have success, because we're able to offer a product that has very clear results on all three dimensions. On the risk, as Gary said earlier on, 98% of the loans are repaid. So do they all go well? No. And sometimes financial institutions get into trouble. But on average, about 98% of the capital comes back. So the risk is contained. On the return side, prospectively, I won't talk about specific funds, but prospectively, returns can be in the range of, 7 to 8 to 9%, depending on how the funds are structured. What about impact? We see so much storm und drang at the moment where people are upset about ESG investing and whether investors should pay any attention to it at all, and whether climate investments should be included with their carbon impact on the planet and so on. We have a very, very clear, unambiguous, transparent, measured impact that investors can see and touch and taste and feel. And so when they go to look at that third dimension, it's very, very clear that they can kind of draw it in their minds. Okay, there's this much risk, there's this much return, and there's this much impact. And then they can decide, express their preferences across that investment. And that is where we've had some success.
Well, the numbers that you threw out in a lower interest rate environment, that's very attractive for private investors, right? I mean, when we think about venture capital, private equity, private debt, it's pretty darn good in private debt with incredible impact. Now, you recently closed Fund 4. Are you able to share the size of Fund 4 and when you did the final close?
Yeah, so Fund 4 just closed earlier this year, and that one is 150 million in size, and again supported by a sort of a rich array of investors who care about impact, who care about water, especially in relation to their own activities in various countries.
That's impressive. I mean, a lot of people are struggling to raise funds these days, so hats off to you guys for doing that. Now, you've explained the mechanisms in which Water Fund 3 and Water Fund 4 work through microfinance institutions in emerging markets. Gary talked a little bit about how you guys are thinking about your expertise, your network, your on-the-ground operations, and how you guys can think about fighting the climate crisis, which affects water. What are some of the issues right now environmentally in terms of climatic crises that are affecting access to water? Then we'll move into how you guys are thinking about this.
Yeah, it's interesting. So what I spend a lot of time thinking about is that water is both affected by and affects climate change. So, of the major disasters that have taken place over the last 3 years, 3/4 of them have been related to water or water shortages. Look at what happened in Hawaii this year. Look at what's happened in some of the climate events that the major typhoons come ashore. There's no water support in place. You see real suffering as a result of it. And the warming of the planet is depleting aquifers. It's depleting the water basins. So there's that sort of impact. But then also, water affects climate. So when you look at the numbers, about 2% of greenhouse gases that we emit collectively are coming from the water and sanitation sector. Now, it doesn't sound like a lot. It's about half of what the airline industry does. But water and sanitation emits 5% of our methane. And if those of you who've looked at it, methane is gone after 12 years in the atmosphere. But for those first 12 years, it's awful. It's 80 times worse than CO2. So when we're dealing especially with sanitation and wastewater, it's a methane problem. And that is bad for the climate. Also, moving water around is terribly expensive. So, if I was explaining it I was explaining it actually to young kids of a friend of mine the other day. We take waste, we mix it with water, we use the water to transport it to a wastewater station, and then we extract the water back out. I mean, that's incredibly wasteful. Water's heavy. It's an expensive thing to move around. And the same goes for our potable water supply. We generally treat it in a central location and move it through pipes to get to where it is to be consumed. very, very energy intensive. And there are things like leakage. So about 40% of the water in emerging markets systems, it leaks away, just disappears. 14% of US water leaks out of the system. So that's just gone. That's just deadweight loss of energy, of carbon. And all of that leads to opportunities to do better, right? So if we can plug the leaks in emerging markets water systems, you're saving 40% right there. If we use smart leak detection technologies, if we do things like capture the methane that comes off wastewater treatment plants and turn it into biogas, that's a big savings. It keeps the methane out of the environment. So we have this two-way interaction. It both causes and is caused by climate. And that in turn leads us to really a double bottom line or a triple bottom line in some of the investments that we're now moving into, where number one, you're delivering returns for your investors. Number two, you're delivering on Sustainable Development Goal 6, SDG 6, water and sanitation for everyone. But you're also delivering on climate change, whether it's mitigation, reducing greenhouse gas, or making countries and populations more resilient for the crises that are coming.
You mentioned leakage. Gary mentioned you're thinking about some infrastructure ideas. Can you give some examples how you guys are thinking about what you can do in infrastructure, given the movement and the waste and the leakages? I mean, you guys have a huge network in the markets. You know your markets. What are you guys thinking about? What are some ideas that you're thinking about?
Yeah, so certainly leak detection, smart leak detection. That's a key one, especially in Africa.
But climate technology a little bit, right?
Very much so.
Okay.
Very much so. That's right. Wastewater treatment plants that either have some sort of biogas recovery or biogenic refinery piece to them, so that they eliminate the methane and instead, turn that to a use or else break it down. That's something that's quite valuable. There are projects underway in India. There has been for many years now. You may have heard of the Clean Ganges project, which is a government-sponsored effort to essentially eliminate or try to reduce the pollutants going into the Ganges River, human waste being one of those. And so there are many projects now underway, some of which we can invest in, where there are wastewater treatment plants built along or close to the Ganges to capture what otherwise would be just going directly into the river. Kenya is embarking upon a very similar plan to clean up its river basins. And then beyond that, there's some, sort of more interesting stuff, which is more speculative, riskier, but we can think about it. So desalination, okay? Desalination is currently, let's say certainly in the Middle East, is one of the approaches that countries are increasingly turning to get some source of clean water. Today, the holy grail is to get down to 2 kilowatt hours per cubic meter of water. That would be sort of the holy grail. What does that mean? It means that the charge in your phone could generate about 5 liters of water. Okay, so pretty efficient. We're close to that. It's around 3 kilowatt hours right now. The best plants are on their way to 2. But there's a new strand of research that's looking at what's called atmospheric water generation, where instead of trying to get water from a source or desalinate salty water, you literally pull the water out of the air. And amazingly, the latest technologies there are beginning to become competitive with desalination. So that roughly speaking, the charge in your phone right now could pull about this much water out of the air. And you can imagine the impact that could have in humid climates, but the technology actually works in arid climates pretty well, not as well. So back to what I said earlier, instead of generating water in a central source, treating it, and transporting it through miles of leaky pipes with all the energy that takes, solutions like atmospheric water generation would be more like the leap that countries have made with cell phones instead of laying fixed lines for telephones. You could generate the water local to its need and avoid the need to transport it. So we see a range of applications, some of which are speculative, some of which are probably a reach, some of which will fail, and others which are more dependable, really a spectrum of opportunities.
But we have to try. So I want to be a little controversial, and you may not like the question where I'm going, but this is, again, a business school, and not everyone knows, but WaterEquity is actually a Columbia Business School case study, and this fall I will be teaching it, and Paul will generously come in and zoom in and participate with the class. WaterEquity, finance first, impact investing, impact first, impact investing. Or I refrain from answering that question, but I'm not going to let you do that one. Where does it lie?
So I'm actually going to go back to the three-dimensional diagram I tried to draw earlier in my conversation. It's both. You know, it's not one or the other. It's in economics, as you know, right? We like to think about the difference between preferences and opportunities. Okay, opportunities are the things that you can do. That's like your risk-return frontier or risk-return impact that I sketched. Preferences are what you want to do. How do you feel about apples versus oranges? How do you feel about risk, return, and impact? For me, what WaterEquity does is we put the opportunity out there, and then we let investors express their preferences on what mix do they want. So I'm not really answering your question, but that's how I see it.
I understand. We think the impact that WaterEquity does drives the financial return. So for us, it is completely intertwined. Now, Paul came here on his way to run the Dublin Marathon and changed his flight to join us. So that's on Sunday morning. So that's right around the corner. It's 36 hours away. So thank you. How have you been training?
Well, I hope. We'll find out on Sunday. I will say I'm jealous of, I ran the New York Marathon a couple of years ago, and that's next week. I won't run that this year, but that is I just have to take my hat off to the New York audience and crowd at the New York Marathon. So Dublin has a lot to live up to. We'll see.
Well, good. We have around 5 to 10 minutes for Q&A, so we would love to move it that way, and I already see one in the middle.
Thank you for the interesting conversation. I tried to tie numbers together. Did I hear correctly? People borrow 160 and repay 210 over 18 months. Does that?
It depends on the loan. Typically, they're borrowing at rates between 16 and 22%. So it would depend on their credit worthiness and yeah.
Okay. No, I just wondered where the kind of de-risking comes in at such high repay rates. So it's more for the institution that is de-risked. I'm just trying to. There's only a 2% default rate, so I don't want to go into too much details, but it doesn't sound that risk-free or subsidized for the users to me. Am I right?
So one of the it's look I'm glad you raised it. One of the characteristics of these loans is that they're very small and very high maintenance to underwrite and to issue and maintain. So you're talking about loan officers going out on mopeds out into rural areas. I mean, we only serve at the base of the pyramid. Those who are unbanked, they don't have a bank account. They're basically working in the informal economy, often an agricultural base. And so the loan has to be serviced by an individual officer who goes out to meet the family. There's a paper, passbook where the loan repayments are recorded and what have you. Cash Poor is one of the institutions that we work with in India. That is a non-profit financial institution in India. And they've squeezed every ounce they can out of the operation because they don't make a profit. They're just there literally to serve and to run as a nonprofit. Even with all the administrative expenses of running it, the lowest they can get the rate down to is 17%. It's just expensive to do this. Now, our collective hope is that with fintech and increased digitalization and electronic means of payment and so forth, that it should be possible to do this with less money. But for the time being, it remains a pretty labor-intensive business.
About one or two left. I see two over here.
Hi, I realize this may not be your area of expertise, but I'm really curious about the atmospheric water capture. How would that work at the utility level, like system level, or individual household level? Can you tell us a little bit more about that?
Yeah, so so let me first be clear. It is not my area of expertise. There are others who know a lot more about this than I do. But
I have a wonderful example when you're done.
Very good. Okay, so I may turn it over to you. But what I will say is right now, the economies of scale still favor larger installations than smaller ones. I think it's when you start to build in some of the costs of, like for desalination, for example, the effluent from desalination is a lot of briny water that degrades the environment. People don't count that when they think about what desalination does. And then there's the energy to get the water to the household. So even though right now desalination on the face of it produces, about 8 times more water per kilowatt hour, the other effects come into play. And one can certainly imagine that at the household level, a solar-powered atmospheric water generator might actually be a great solution in many cases.
There's a company called Source Global. They build hydro panels that are powered by solar energy. So there is, it's very clean energy, and that essentially takes moisture from the air and creates potable water. It started out as a startup backed by climate venture capitalists. It has now passed its Series D. This is all public information. Microsoft is an investor. BlackRock is an investor. Essentially, is they are installing these hydro panels in places in Arizona for the Navajo Nation. They're doing it in Papua New Guinea. Yeah, Papua New Guinea is surrounded by water, but they don't have clean, safe drinking water. And then corporations are starting to buy the hydro panels as well and putting them on the roofs of their buildings. So we see this as kind of one of the first steps, and they're making huge headway. If you buy ProudSource, that aluminum bottled water you see everywhere, I think I saw it today around the corner. Recently, Source Global bought ProudSource. There's a lot of word source going on. The way this is going to go is Source Global, through their hydro panels, is now going to source almost all of those aluminum cans of ProudSource going forward. So that is one really unique example that's made significant headway. One more, yeah, we got one more.
I would be curious to hear your thoughts as to how investors should think about water investing in the portfolio context, especially within the realm of real assets and infrastructure, if you're able to comment. So with regards to maybe the diversification benefits, or are they limited? So.
Yeah, I'm happy to do that. So the S&P has an index called the S&P Global Water Index, which you look it up. That, and there are now mutual funds and ETFs based on that index. That index was the best performing sector in public securities markets this millennium. Now, people don't know that because the return on it is below the market index, but the risk on it is substantially below the market index. So when you look at the information ratio or Sharpe ratio on the S&P Global Water Index, it's pretty attractive. You ask about the private market. EDHEC in Paris, they maintain a database of infrastructure. They have an index called the EDHEC Infrastructure 300. It looks at 300 private infrastructure companies across multiple sectors globally. There are 19 water and sanitation companies in that 300. If you look at the returns on those 19, they have also been a star performer, I would say second or third of the 10 sectors this millennium, up through 2018. I haven't seen data after 2018. So what's interesting is that even if you only care about risk and return and you take away that third dimension I mentioned, water and sanitation is a very attractive asset class.
Paul, thank you so much for changing your logistics and your flights to be with us today, for the great thoughts and strategies that you've shared with us today. I think we all wish you really good luck on Sunday. So thank you very much.
Thank you. Thank you. Thank you.